Mag, and it's time now for the Word on Wall Street. Top investors watching your money. Joining me now, Key Advisors Wealth Management CEO Eddie Gabor. Also with us is Gregory Farinello this morning. Eddie, good to see you. Thank you for joining the conversation. I want to get your take on markets here and this rollover that we are looking at. We got the Dow Industrials down 348 right now. The NASDAQ also down in the triple digits. And, of course, the NASDAQ yesterday was down better than 250 points as well. The S&P 500 snapped a two-day winning streak. And it feels like there is a rotation underway. Nvidia's blockbuster quarter was not enough to calm investors. The stock was down 5%, even though it had a strong, sharp jump in profits and record revenue. You've got short seller Michael Burry out there saying that Nvidia is the next Cisco. It's mirroring what Cisco was at the height of the dot-com bubble. And as a result, you're seeing money come out of growth and go into value. You're seeing money come out of big, high-flying tech and go into things like gold, which is showing a double-digit move a year to date. Where are you on this rotation, and should we be rotating out of growth as well?
Maria, thanks for having me. And yes, back in December, when we were on your show, we talked about the fact that we were betting on the economy in 2026 and not on technology. And I think it's crystal clear that the market is sending a clear message that tech is not going to be the leader in 2026. And the reason why has nothing to do with the quality of the companies. These earnings are great, but the market's rejecting these post-earnings because the bar was set too high. And when you take a look at the areas we've been rotating into, industrials are on fire. They're up about 13+% this year when you look at the ETFs. Regional banks are up almost 9%. Housing's up 11%. So there are plenty of bull markets out there. It's just not in tech. And the problem is, as this rotation accelerates, there is so much money concentrated in the Mag 7 and the NASDAQ that's where the money's going to be raised. So that's another headwind that technology has. So we think the worst is not behind us yet on technology. And we will look to get back in second quarter to third quarter because that's when we think the bottom will probably show. But we're not here to try to catch a falling knife, and we want to focus on the bull markets, and that is the U.S. economy.
Yeah, I mean, look, we still have this data center build out, and that is going to continue. This morning, Mara Partners is developing AI data centers with Starwood. Got a lot of partnerships underway in different areas of the economy because people understand that, in fact, maybe the valuations are an issue, but the AI situation is real, and we're going to see these data centers build out. There's also the streaming wars. Gregory, Netflix walked away from the deal to acquire Warner Brothers Discovery after declining to match a higher offer from Paramount. Paramount Skydance raised its bid to $31 a share. That was a value of $111 billion. The Warner Brothers board deemed the all-cash proposal superior. So Netflix walked away. Its one and only offer was $27.75 a share, valued at $72 billion. It says the transaction no longer makes financial sense. Your reaction?
It's all about price. It's all about valuation. I think in the end, the good news is this year, M&A and consolidation is going to be a theme. The regulatory environment is still very, very good. But at a certain point, valuations just don't make sense. And Netflix walking away, they're saying, look, we don't like it at this valuation. So I think all of these companies are going to be okay in the end. To me, the most constructive thing really in the marketplace for this year is that we have a good regulatory environment. We're going to continue to see companies consolidate. We're going to continue to see companies merge. And all of these companies are going to be okay in the end. But valuations do matter. And at a certain point, companies, their boards, their shareholders, they look at valuations and say, look, this doesn't make sense.
Yeah, I'm looking at the economically sensitive parts of this economy, Eddie. When you look at yesterday's market, the transportations did well. Why? Because of the real economy. The backdrop feels good. Do you want to buy cyclicals here?
Yes, I mean, again, I think you want to be in the economically sensitive areas because when you look at the fundamental story, growth is going to accelerate as pro-growth policies continue to come into this economy. And earnings expectations for those names coming into this year were really low. So they're beating on earnings. The fundamental backdrop is strong, and it's very under-owned. So we're going to see more money flows into those areas and continue to take them to new highs, in our opinion.
All right. I love to see the transports on the move. The transportation average up better than 2% yesterday. Good stuff. Eddie Gabor, good to see you. Thank you, sir. Gregory, you're with us all morning long, and we appreciate that. Quick break, and then we're talking with Christian Whiten on national security next.